G'day guys, my name's Christie and I'm from Capital Property Funds. Joining me today is Xander and we're going to give the June 2025 portfolio update to our debt fund. And to kick things off, Xander, can you give us an update on Tingalpa?
So Tingalpa's been going really well. It's about 75% complete. Over the last couple months, they've been doing some sales there on the lots, and they've got 100% debt coverage. So we're very happy with that and how it's progressing. We're expecting construction to be finished at the end of July, and then for repayment around late August, early September. So we're very happy with that. We've just released a video on Tingalpa. So if you're an investor, feel free to go watch that on our YouTube channel. You can see from day zero to where we are now, and it's progressed really well.
And look, just for that, for those that aren't invested in Tingalpa, it's an industrial development in Brisbane, 19 to 20 industrial lots, selling like hotcakes. And as Xander said, there's the video update, and also the sponsor of that project, Mark Drillich, has got another project coming in, similar project in Oxley, but that'll be something we can talk about in the next month or so.
Yeah, perfect. And Joe, can you talk about what's happening at Teralba?
Yeah, Teralba. Okay, thank you, Xander. Look, Teralba, located on the banks of Lake Macquarie, for those that aren't invested in this particular fund. It's just south of Newcastle, lovely location. It's 12 townhouses, I think, and one detached dwelling. And what it was 2 blocks of land. They've joined the titling now, so we have one title. And they're progressing well. Civil works have occurred. As with most of the east coast of Australia, they have had some rain delays. So we expect there'll be a little bit of an extension of the program. It was initially a 12-month term, but we'll probably have to give an extension of about 2 months, depending if we can catch it up in the coming period.
Yeah, they were on site this Monday, so it has dried out a little bit, and hopefully they'll be building a new construction plan, construction schedule, and hopefully in the coming months we can provide that, and they'll be drawing soon and building those townhouses they're going to be developing.
Yeah, and that reminds me too, there's further draws coming. That one's paying 11%, so it's a very good risk-adjusted return. First mortgage security paying 11.
Yeah, perfect. And so moving on to Spring Creek. So we have a few Spring Creek loans. Just to summarise, Spring Creek's going really well. You were in Singapore with Terry last month. And Terry, from all accounts, they've run out of completed stock, so they're actually pre-selling the next stages. In terms of what loans are expiring there, we've got Spring Creek Stage 5, and we've got Spring Creek Land 2024, and they're expiring the next 3 to 4 months. So in the coming updates, we'll have a bit more information on what that's possibly rolling into. With the high demand there, they're looking to do bigger stages, move up to possibly 100 in a stage. So there's a lot happening at Spring Creek, and just definitely something to look out for.
Yeah, just to add too, is that you are right. I mean, the big theme in Australia, everybody's reading the paper, is that there's a shortage of residential housing stock. So Spring Creek is providing land lots, so residential land lots. They've got 800, a master plan community for 800 land lots. They've sold about 300, and so that's going really, really well. The developer has been known to us for a long period of time, and so a good one to put a toe in the water with.
Yeah. So moving on to our newest deal, which is Walloon. That settled on the 30th of May, so that was just an initial settlement, and there'll be further draws for this one. It's a 15 land lot subdivision, so the blocks are 4,000 square metres, so 1 acre in the old language. Very excited with this one. Joe, you were on site 2 weeks ago with that one?
Yeah, that's correct. Yeah, so that's another good one again, residential land lots and non-built form construction. As you said, 15 land lots. What we do like about it, look, it's only 15 land lots, so a doable deal. It's not going to flood the market. And within that local government area, there is a shortage of stock. We like that, and paying. I think that one's paying 11 or 10.5%. So a very good risk-adjusted return for a first mortgage solution.
And then moving on to possibly our biggest loan at the moment, Paddington. So as some of our investors may be aware, we're currently rolling over this loan. Really excited for the next 6 months. A bit of history on Paddington. They had 100 metres of continuous frontage for Given Terrace, and then at the back was an old car park. So in the last 12 months, they've knocked down that old car park. They've built a 2-story underground subterranean car park and then a 2-story childcare centre on top, which has been leased to the Kids Club for 20 years. Occupancy occurred last month for that one. So the childcare centre, that's providing income support for the loan now. We've got the underground car park providing income support for the loan, and the shops at the front providing income for it. So, and for the next 6 months, they'll be getting their works approval for that. So they've got their council approval now, they just need their works approval. So in the next updates, we probably won't have too much to talk about with Paddington, as that's just a lot of paperwork, but when they do get their works approval, there'll be a lot into the next stage, which is 12 luxury apartments, and we're very excited for that next stage of Paddington.
Yeah, absolutely. I mean, just to add to what you've said, you've given a very comprehensive overview. What I like about Paddington, look at inner city suburb, affluent area, tree-lined streets, great cafes, restaurants, but these particular borrowers have 1 acre of land in Paddington, so it's irreplicable. Stage 1 was the car park and the childcare centre, which is now completed. So they've now proven to us that they're a great counterparty. And the next chapter is stage 2, which is they have approval for 12 luxury apartments, residential apartments. So again, paying 10%, a very good risk-adjusted return.
Moving on to Port Douglas.
Yes.
So Terry was up there over the Easter long weekend.
Yes.
Hopefully trying to get some interest from Melbourne, people leaving Melbourne and moving up to Port Douglas. I think there was about 120 people inquire.
Yes.
They are looking to diversify the offering there, so it's just currently land lots.
That's correct.
And it's got a very low LVR, about 40%. And to differentiate, Terry's thinking about building 2 spec homes there, just to, instead of having the land lots and the prospective buyers having to build their own house, just to diversify that and give them the option to buy the completed stock. So, very comfortable there. 40% LVR. There is a bit of wiggle room if they were to build those houses. So,
what I like it, just to add to what you've said, is that you are right. It's 40% LVR, so very low LVR. It's only 22 land lots, paying 10% again, and he's only got to sell, I think, 8 or 9 of the 22, and he's completely repaid us in full. So again, a great risk-adjusted yield, and it's Terry McKinnon, who is known to us for a long period of time and a trusted counterparty.
So moving on to Sanford. So Sanford rolled at the end of last month. We're very happy with Sanford. It's a residual stock deal, so there's they're just having to sell their completed land lots there. Since the first RBA cut in February, we have seen increased sales activity there. So currently they've sold 8 of 19 lots. And since the February cut, they've sold 1 a month. So for those who have rolled over into the new facility there, expect maybe once a month, hopefully, if they continue at this rate, to be selling a lot. And we're very happy how that's going, and that, I guess, ties into your Lambie with a similar story, Joe.
Absolutely. I mean, I can't help myself. I mean, that one, it's all completed stock, selling well. Now, it was a little bit harder to move that stock. They're selling the blocks at about $1 to $1.5 million. So it's premium stock, 4,000 square metre block of land. But the rate cuts have really stimulated sales activity. And your Lambie is similar. It's the same borrower, similar type of stock, sort of $1 to $1.5 million for a 4,000 square metre block of land, just west of Brisbane, all completed, looking immaculate, and selling down. So 2 really good risk-adjusted returns there. Both, I think, paying either 10 or 10.5%. I can't remember, but definitely above 10%.
And just with your Lambie, we've so far sold 6 of 12. And we've got 2 more expected this month. So that loan is expected to finish in November, but we think with the recent sales activity, we might be finished a bit early. But we've got plenty of other deals happening, so we'll be able to roll into something. Joe, do you want to talk to us a bit about what's happening at Park Hill, Toowoomba?
Yeah, Park Hill, Toowoomba. Look, again, residential land subdivision. So again, we're building something that people want. First mortgage is paying 11% on this one, so very good risk-adjusted return. The story there was the borrower had completed stages 1 through to 3, so really good feel around the saleability of the product. They got into a little bit of trouble, so we have our own. We have what's called a development management deed, where we put the landowner at the back of the bus, and we've got control of this. So we're managing the works approval, the construction program, and the sell down. So we're just about to get a works approval out of council, and we expect construction to happen on that shortly. So we'll be seeing further draws on Park Hill. And I believe too that we're going to see a little bit of an uplift in the value of the completed stock. So look out for that one. Again, looks paying 11%. We'll talk more about our outlook of the market soon. But I think, if interest rates do continue to drop, and that one will look better and better. And it's got about 9 months to go, I think, or thereabouts.
Yeah, no, definitely. And once we do have that works approval, there'll be more draws. That one's paying 11%. And we're hopefully in the coming updates, we'll have a lot more on that. So very exciting. And then just to finish off the portfolio with Markula, so that's another Terra McKinnon
Yes,
loan.
that's correct.
It's a splitter, so in Markula they've got an as-is right if the block's 500.
It's slightly over 500, I think.
Yeah, they've got the as-is right to split down the middle and build two dwellings there. So Terry's in the works of getting that through council.
Yes.
And we're looking forward to him demolishing those houses and building two and moving on to the next Terra McKinnon loan.
Yeah, look on that one too. Look, they're not building any more land east of the David Low Way, which is a road that separates Markula. So it's a 4-iron from the beach. If you hit it well. And look, he's putting two architecturally designed duplexes there with plunge pools. I think it'll go very, very well. Terry wanted to do more in Markula, but it's just very, very hard to find land at the moment, which bodes well for him being able to bring product to market into a falling interest rate environment. So again, sorry to interrupt, first mortgage paying 10%. So it's another very good one. There'll be draws coming on that when he gets his works approval, which I would expect in the coming weeks. So look out for that one.
Something for next update possibly. And then, as you mentioned, we had a rate cut in February. We had one last month, and I think what I've heard is that we're going to probably get another one in July. So
it looks like
3 cuts possibly this year, and then maybe one in November or December. So we're thinking interest rates. They've hit their peak. They're on their way down, at least for this year
cycle,
and that should bode well for the residual stock deals as your Lambie and Sanford. And then moving forward for the other deals, if debt's cheaper, people can borrow more money. As you said, there's a shortage of houses, population growth strong. So we see value uplift across the portfolio, really.
Yeah, look, what's good about the interest rate cut is that feasibility analysis stacks up better for developers looking to initiate projects. But so we're seeing two things. Interest rates are coming down. Look, I must admit, I think we're still going to be able to hang on to that 10% rate for the immediate future. What we're seeing is we're seeing assets that have come through this rate cycle, if you like, where we had inflation, construction, supply chain issues, and high interest rates. And people have come through that, and they might need a little bit of refinance, and it might be a little bit stretched. They might have just managed to survive that crunch in the cycle. So we're seeing, instead of doing a mortgage at first at 65, we might be seeing a few more second mortgages as well. So they want to borrow 75 cents in the dollar. So the benefit for our investors is that I think the worst is over. We're running down the hill now, but you can still pick up those sort of 17-18% second mortgages. I think we'll see more of that with a good first mortgage at paying 10. And so that's good. So we're going to see restructuring opportunities. And the other thing we're seeing is that our quality borrowers are picking up opportunities where people weren't able to make it through the cycle, and they're able to pick up opportunities that stack up now at today's prices. So we're very excited. We're seeing more opportunities than I think we have in the last 6 months since the interest rate cut and the election.
Yeah, we've definitely got a strong pipeline. And in terms of what are some of the things to think about with more interest rate cuts along the line? Some of our deals, Spring Creek, it's still got about 11 months on Spring Creek stage 6, 11 months. We've got Walloon, that's a 12-month deal, paying 10.5. Lock in these higher rates that have these 12-month loans, because Spring Creek next year, that might be a 9.5 or a 9.75. We don't know we don't have a crystal ball. We don't know what the RBA is going to do. But if we do get another 2 rate cuts, highly likely that it's a good time to lock in maybe one of those 12-month deals. And
yeah, that's a good point. I mean, for investors that are new to us, haven't invested with us before, is that when you come into one of our opportunities, when you're coming in by the CPF Property Debt Fund, is that you are locked in. If it's a 10% rate, it's locked in for the term of that investment. So yeah, I think it's right. If you haven't locked in on some of these opportunities now, you should think about it, because probably interest rates are going to come down, and this time next year our offerings may not be as high as what they are now.
Yeah. Well, thank you for listening to our June portfolio update, and we look forward to July.
Yeah, thank you very much, Xander.
Yeah,
All the
thank you,
best.
Jay.